Welcome to the B2B Growth Blueprint Podcast, where we talk with entrepreneurs, founders, and leaders at B2B services, tech, and SaaS companies to learn the systems and processes they've used to create success for their business. We'll also learn from marketing and sales experts to provide insights to help you grow your business. I'm your host, Mark Osborne, and the podcast is brought to you by Modern Revenue Strategies and their 10x ROI B2B Growth Guarantee. Schedule a free diagnostic call to learn the fastest path to double your B2B revenues in just 90 days. Hello, and welcome to another episode of the B2B Growth Blueprint Podcast. I'm your host, Mark Osborne, and today I'm very excited to welcome my guest, Doug Lowenthal. Doug is the CEO and co-founder of MSP Fuel. With more than 25 years in the IT and MSP world, he helps owners and teams to reach their full potential. At MSP Fuel, he shares the same systems and strategies he and his partner used to grow 3 different MSP to 7-figure profits. Before MSP Fuel, Doug founded and led True Technology for 2 decades, serving a loyal client base with world-class managed IT services. Under his leadership, True Technology earned Inc. 500 and 5,000 honors and Best Places to Work recognitions. He successfully exited in July 2021, and he brings practical playbooks, candid stories, and a mission to help MSPs scale with confidence and efficiency. Doug, welcome to the show.
Yeah, thanks for having me on, Mark. Thanks for the intro.
Yeah, absolutely. So before we dive into some of the topics that you and I have been chatting about, why don't you give our audience a little bit of background? Tell us your story a little bit of how you got to where you are today.
Oh my, okay. It's been a it's been a windy road, but I won't go all the way back to building my first PC when I was 9 years old. But,
Okay.
but anyway, no, I found that I was a technologist. I always loved technology, but I found I really had a passion for business, and I just happened to run a technology company. The more I learned about businesses and where I found the commonalities between them, like we ran a technology business, but our clients had the same challenges as us around sales and operations and marketing and HR and finance and managing all of those different systems. So, it was a journey to understanding that and developed a passion around it. So that you mentioned Best Places to Work. That's actually one of my proudest awards that we had won as an organization, because it really spoke to as a testament to like the need for a strong culture in an organization and what I was able to build there. I used to call it my work family, which a lot of times spent more time with them than I did with my actual family, as a lot of entrepreneurs I'm sure have experienced. But it's been a great journey, and running that business for 2 decades, as you mentioned, and then eventually having the opportunity to exit it, building something that had significant enterprise value, and then taking about 1.5 years to kind of digest, figure out how to make money with money. Really learned a lot about personal finance and home office and things of that sort, to then transition into really then feeling compelled to come back into the industry to help others, for lack of better terms, kind of get unstuck, because I was stuck for a long time in my business. I joke around that for the first decade I worked for a lunatic myself. Which is, it was a true story. I used to have a lot of one-on-one meetings, and they were with myself, and they were rough. But but it wasn't until systems and really starting to understand what it really took to scale an organization and leverage the amazing talents of the individuals I had working with me and for me, that we really started to grow. So with that, felt compelled to start this new business, and it's been a couple of years now, and that's been such a gift in seeing the growth of our clients and seeing and I'm learning every single day still, and working with them and figuring our place in the market and what we're doing. So it's just a continuing exciting journey. I look forward to the next 10 years and what we're doing here. But kind of there's a lot of bits and pieces in there, but kind of where we are today and how we got here.
I'm going to pick up on some of those bits and pieces because you said a couple things that are really interesting. And the first is, sort of this experience of growing and scaling, and that you really felt like you started to hit your stride as you got systems and processes in place. And then, going through that experience of an exit, and now, working with other companies, both helping them grow and scale as well as helping them prepare for exit. As you think about those systems and processes that help companies, how do you think about the different approaches for those that are trying to grow and scale on a long-term horizon of I'm going to run this for a while, versus when companies are starting to prepare for some sort of transition, whether that's a recapitalization or maybe it's even a founder exit? Are there different approaches, different things that you see be more valuable or less valuable in those different contexts?
100%. So in one of the first conversations I even have with potential clients of us is asking what their goal is, for the business the next 3 to 5 years. A lot of them do have, exit plans, some of them are building multi-generational companies. They all have different goals, but the
Yeah.
time frame is critical, right? Because you're looking at, it's always from X to Y by when, right? So it's looking at what you're currently, what are you looking for from an exit perspective? Have they stopped to think about that? How much money do they need or want, and how much is enough? Like if they're looking for retirement and not looking to work again. So there's a lot to unpack there to figure out, the economics behind what they're trying to achieve, and then look at where they are, and then see what they. In some cases, like their time frame is not even realistic, and that's something we have to break down and think through. In some cases, if the time frame's too short, and I say too short in the sense of, from my experience, and it's a lot of times they're looking at the trailing 12 months, like there's a hyper focus on that. So what was your earnings, your EBITDA during that time frame? But then also they're looking at the previous 36 months, maybe at 5 years, depends on your business and all
Right.
that. So there's yeah, it definitely 100%. Like if you're a short time frame looking for a liquidity event, or to take some chips off the table, there's going to be some different things you're looking at. Like there's a term skinny bomb, which I kind of hate, but sometimes you have to do that if you're looking. But a lot of PE firms, venture capitalists, they can see through a lot of that stuff. So you have to be
Yeah.
very careful and intentional about it. So yeah, it's all about time frame, approach, and goals. And if it's hey, I'm running this business, I don't ever see selling it. It's a cash machine, or I want to turn it into a cash machine. My goal is really more quality of life, and I want to be able to step back. You take different approaches in that regard. You're empowering your leadership team. You're looking at how do you set up, a structure to support you not have to be involved in every decision. So yeah, there's a lot of different variables and tactics based on what the longer term goal is, for sure.
So you used the phrase in there that I want to go back and unpack a little bit. Skinny bomb. Right.
Right.
So
I
I
knew you
think
were
I
going to
know
go
what
back
you
there.
mean there, but give our audience the definition of what that is.
So it actually has a couple of different meanings, in the sense that one is, really going through line item, all of your expenses, looking, identifying what's essential, what's not essential, and really streamlining it to the point. Like I give an example. Like we had a client in my MSP world that when I owned that business, I saw, like, it was visual. They were skinny bombing to the point of that, like they used to have every type of drink you could ever want in the refrigerator for their 250 employees, and they like stopped they used to bring lunch in every day for them, and they started cutting those types of benefits and amenities back, because it was obviously eroding, the EBITDA, which is every dollar that was there had a multiple for the owner at exit. So
Right.
they were, taking that approach, which again, PE, VC, they can see through a lot of that stuff. So you have to be mindful of it. But the other version of it, which I think is more practical for what we see, is there's a concept of like a business inside of a business. And what I mean by that is that if you look at your client base and you really do an analysis and figure out who's making you the highest gross margin, and who maybe is even costing you money to serve, that could even be going on. And then you even do an analysis of your staff and look at, A, B, C, and do some force ranking. Like if you there's an analysis to be done there of saying, if we kept our top tier highest gross margin clients and we kept our top performing staff, like what does that business look like if the bottom was trimmed? And
Right.
at that point, that could be a much higher gross margin, higher EBITDA business that plays forward. And so there's some opportunities to do both things.
Yeah.
So that's kind of skinny bombing. But yeah, I think you have to be intentional about it. When I was going through my exit, I got sage advice from multiple people, but one of the things they shared with me was like, don't do something you wouldn't do in the normal course of operating your business. because also deals, exits potentially fall through. And
That's
if your
right.
staff, I kept it very close to the chest until the actual exit. So if your staff finds out that you're doing this, it can disrupt relationships, maybe even clients catch wind of it because they can sometimes see you doing these things a mile away. So you have to be
Yeah.
careful and mindful of that as you're making change to try to, skinny bombing, for to the point of that it's impacting culture, to the point that it's impacting potential future relationships with team members and even with clients.
Yeah, I love the term skinny bomb because it implies that it is kind of a ticking time bomb, and oftentimes it can be. And the phrase that I had never heard that phrase before, but the phrase that I've used is, burning the furniture to keep from turning on the heat. And like I've worked with companies that were, preparing for an exit or a sale or recapitalization, and like you come through the front door and like literally there's no furniture, like because they moved into a smaller building and they left all their furniture at the old building, and now they're back to folding tables and chairs, and really getting that kind of entrepreneurial vibe, which can be really good, and that it keeps you thinking lean, but it also can be just burning people out to the point where as soon as that liquidity event happens, everybody's bolting out the door, and the new owner is going to be left with that bomb going off.
Yeah, that's the part that the PE VC firms typically can see when you're really stressing staff out because you don't want to hire because you want to keep the margins high.
Yeah.
That's I know that was through my due diligence. That was one of the questions that like, are there any hires that you would need to make, to continue to scale? And of course, you have to, or you should, I say, answer honestly because they'll
They'll
debit that.
find out eventually. That's right.
They will. Yeah, there is a true up that potentially could happen. So something to consider.
So you brought up private equity, and I know private equity has been pretty active in the MSP and managed services space, and it's an interesting sort of dynamic that evolves with private equity, and even in like home services and other industries, they've been actively involved in sort of rolling up operations, and a lot of people have had some successful exits. But I think there's another strategic element that's worth thinking about, and someone that has, sort of seen this a few times, that private equity can not only be rolling you up, it could be potentially rolling up some of your customers or some of your competitors, which then changes that landscape a lot. Tell me a little bit about some of the things that you've sort of observed there, and some of the sort of watch outs that companies might think about if they are in a space that is being disrupted a little bit by private equity.
Yeah, I think yeah, two different aspects there. So one is with your clients getting potentially acquired. We are seeing a lot of M&A activity really across all industries, and the way we're seeing it, the MSP space is hot and ripe for acquisition. That's been going on for some years now, but we're seeing a lot of their clients, our members, they're having churn due to that, and
Uh-huh.
it's a double-edged sword because you're getting involved. I mean, as a technology partner or provider, and they're helping them leverage technology to be more profitable and more competitive, and making themselves and those owners of those companies achieve their goals, which their goals could be a potential exit. So it's almost like you're teeing them up to be acquired. And we're doing the same thing with our members. Like if they want to exit in 3 to 5 years, and we're going to help them achieve that goal, then our clients churn as well. I think to combat that, a couple of thoughts. One is ultimately that you have a strong sales pipeline, right? You have to constantly be displacing that potential churn. And then
Yeah.
the other side of it is really to the point, depending on the type of business or service that you provide, you could potentially, partner with them that you could participate in that liquidity event. That wasn't something that we did it, something an MSP could do or a technology company could do with their I mean, I'm not sure, explore that as an option, but for us, it's not something we're doing right now with our members. But depending on your industry, is something to explore. So that's the part as far as your clients being acquired. The other piece of it is you're a lot of roll up that's happening amongst your competitors, and
Hmm.
I think that those are potential opportunities. I know when we had sold and the company that acquired us, it was really interesting. They treated each holding as its own, we continued to operate under our own brand name. We had some help from corporate, but they didn't roll us up into one big brand. So it wasn't typical roll up in that regard.
Yeah.
But when that happens, I know that even though, because there was a press release that went out, and our clients started getting calls from a whole bunch of competitors saying, oh, what happens when they roll up, service goes downhill, and,
Yeah.
jump ship now and we'll, take you on. So our clients let us know about that. So there's something to be mindful of. But, when you're a small shop potentially providing service in a market now where we were there, most of our competition had rolled up into larger firms, but we kind of then took the approach of like very boutique services, and like we were selective about who we do
Right.
business with, and that kind of became a differentiator for us. So we weren't, if you have a heartbeat and a credit card, we weren't doing business with you, just for that reason, right? So we kind of went the other direction that they went because they had to feed this machine, and we're part of this much larger entity. We became much more personalized and hands-on, and that played to our advantage competing against them in our space until we
Yeah.
were acquired.
Well, and that reflects that, sort of changing strategy based on changing market conditions. And that's, sort of at the core of strategy is to be able to do that. That also kind of reminds me, and to sort of harken back to some of the things we were talking about before, which is, you know, different processes and systems at different contexts that the business is operating in. One of the things that we see, and we work pretty exclusively in, sort of marketing and sales systems for companies. The traditional wisdom with, marketing is, well, you start with strategy, and, you figure out that new messaging and the market segment that you're going to talk to and that competitive positioning. But that's a lot of, sort of strategic work that kind of has a negative ROI for some time. Now, it pays off handsomely eventually, but if you're looking at selling the business in a short period of time, it might not be worth investing all that research, that analysis, that synthesis. Might be better to sort of execute against the strategy you've got and put processes in place that can improve efficiency and drop dollars down to EBITDA. What are some other, sort of differences in approach that you see companies taking based on them being in sort of short-term liquidity, other than just skinny bombing and trying to tighten everything up? Are there other more strategic things on less focus on launching new products or moving into new markets or new customer segments, or is it what are some other things that you've seen be important there?
Yeah, so great question. I do want to go back to what you just said because it's interesting with our members. We just actually built a calculator regarding marketing ROI,
Uh-huh.
and to the point that we calculated EBITDA impact in the first 12 months. To your
Yeah.
point,
Yeah.
yeah, it's something you definitely like. If your time horizon is short, you need to be mindful of that.
That's
But
right.
if your time horizon's longer, then obviously the ROI can be there, and it makes sense to make that investment. So yeah, no, 100%. I just to reiterate what you just said, this just literally came up last week with some of our members, evaluating marketing investments.
Yeah.
So great point. But yeah, from a strategic perspective, I think you say strategic, but I'm going to go tactical on you because I think that there's a lot
Yeah.
of foundational stuff that can and should be done. I mentioned earlier gross margin evaluation on a per client basis, getting the data that you need to do that analysis, because ultimately, that's where there's upsell conversations to be had with existing customers to right price them. That stuff drops to the bottom line. You're already servicing them potentially that way, and you don't have to add more staff to do it. You're just getting the pricing in line. So there's some tactical things that can be done to really improve your EBITDA. Something as simple as Mark, this is something as simple as billing for what you're actually doing.
Yeah.
Some basic things here, like you're supposed to charge them for 100 of whatever it is, and you're only charging them for 80. I mean, doing an audit of that, a
Right.
lot of those things can have immediate impact. So there's some, I would say, work through the most obvious things first. I say obvious, but some like move past that and start even going higher level before shoring those things up, to then really start impacting their EBITDA. But I think a big part, and it depends on your acquirer and your industry, and I know this isn't specifically for MSPs. So, but I would say, having a strong sales engine typically because there's one aspect of your EBITDA, but from a valuation perspective, there's goodwill, right? Which is they're basically looking at the intangibles of your
Right.
business, and the intangibles are if you have a solid client base that's loyal, that's been with you for some time, you don't have a lot of churn. There's if you have some clients that are notable names in your market, right? Your reputation in your space.
Yeah.
So if you look at those things and you're providing a great service, but your sales engine, if you're constantly bringing in new clients at the right gross margin, on a consistent basis, and you have a mature process around that, then at that point there's value to that, because they don't have to install that, they don't have to invest in it, and then it's something that you have. If you have a marketing system, with what you do, that's constantly generating highly qualified, MQLs, marketing qualified leads, and those are coming in, you have a high close percentage, there's value to that. So there's things to look at from the operations perspective, financial, billing, making sure that's accurate, upselling clients to be at the right gross margin. Of course, you have to be in a value position to have that conversation without creating risk of churn. But it's a multi-pronged approach. So there's no silver bullet here, but there's multiple things you can do to create some short-term wins and then some long-term benefits.
So you just hit on something that made me remember something else from earlier, which is, you talked about sort of that goodwill, that intangible. And, there's an old phrase that, culture eats strategy for breakfast. You have, people on your team that are highly motivated and have a culture of, achieving and delivering that makes a company super valuable.
Yeah,
And
shame on me for not mentioning that first. But anyway, keep going.
Oh no, but and you also talked about, sort of that achieving the one of the best places to work was one of the things that you were really, felt very, proud about and honored. And so, obviously there's a lot of value both in, running the business today as well as in the enterprise value that you're creating that might have a transaction from achieving that kind of, best places to work status. So I'll take a little left turn. We didn't talk about this before, but as someone who has successfully created one of the best places to work, what's your primer? Like, for someone else that might be listening that's like, I see the value in creating that kind of environment within my business and I want and endeavor to do that. What would be your, sort of your tips and tricks on how to achieve that in their business?
Right. So, great question. I'm glad we went here because I think a lot of the things I'm talking about, the basis of them and a prerequisite really is strong leadership and a positive culture, right? So when you think about leadership, it's like someone that people want to follow, right? For lack of a simpler explanation, but
Yeah.
ultimately, having leadership, from my perspective, came from sharing vision of where things were heading towards, but then also getting grace from your team that, we all know in business, there's zigs and there's zags, right? So to the
Yeah.
point that they trust you to not always make the right call, to make a call,
Yeah.
and then but trust you to be able to identify when headed down the wrong path, and that you'll course correct and get things back on track. And ultimately, one of the things I personally held near and dear was that if I said I was going to do something, that I would actually do it, right?
Yeah.
And it wasn't even in short time frames. Sometimes I said I would do something, and it could take me a year to finally deliver on it, right? But the team knew it was coming, right? And that gave me a lot of grace with them when we were working on longer term plans and trying to realize even some people that were in a position that they really didn't love, but they knew that the next position was coming as we scaled and grew. And they gave me, 6 months, a year of grace to be able to get to the point that they can move out of that role, right? So as you're growing. So I think leadership is key in sharing vision. And there's culture is part of this in that sense. You have to be extremely intentional about it. And intentional, these aren't just words, these are things that you're doing in the business.
Yeah.
From a leadership perspective and sharing vision, we followed, we were like an EOS shop, but we did a lot
Uh-huh.
around the great game of business and Rockefeller habits scaling up. We incorporate a lot of the best practices around those methodologies. But with that, we had, we set our quarterly rocks, we had our annual planning, but we would bring it back to the teams. We'd always have quarterly kickoff events, and we would share with them. We had themes that we tried to pull people into, or tried everyone in the company involved in a theme. And so it was an active process, and we had weekly team meetings that drove to a monthly all staff, where we gave them updates on how everything was going with the plan, right, that we shared with them in the quarter. So it was very intentional in communication, which is a key part of it. Culture, I always say that culture is what actually allows you to make change in the organization without resistance, right? So if the culture is positive and there's strong leadership, and that's something that could be built if there's not, and something to be intentional about, then at that point, as you're making the changes and you're introducing new things to the organization and great ideas that may not turn out to be so great, and you got to pivot, that's what absorbs it, right? That's what makes it that, okay, like, let's put our, let's just regroup and like get back to it and stay positive, right? So culture is something that, again, we used to have, we had a budget we allocated towards it. I'd recommend, intentional events, getting people together. If you're virtual, there's a lot of fun stuff you could do around that now. So there's lots of opportunities to drive a positive team culture. Again, these are people, I said this earlier, like your work family. Depending on the size of your organization, it could be teams of families that are working together. So I'd say, being very intentional about it. There's, surveying your staff just as much as you survey your clients. Meet with your staff as much as you meet with your clients. Just as you're doing quarterly, business reviews with your clients, do quarterly business reviews with your team members, right? So I say that there's a lot of operational rhythm, and it's very important to be intentional about it. But the leadership and the culture are the foundational to then implementing all these other operational changes. It's what absorbs it. And it's something that you evolve over time, but it's something you have to be extremely intentional about over time as well.
Yeah. Well, Doug, you're obviously an expert in a lot of super interesting topics, and you have a ton of experience we could learn from, but I got to be mindful of your time. But before I let you go, tell us a little bit about who you work with and how you help them, and the best way to connect.
Right. I appreciate that. Yeah, I could tell them I get passionate about this stuff. So I'd love to help, even if you're not in the MSP space, feel free to connect with me on LinkedIn. DM me, if you have a question about your business. As you can tell, I'm passionate about business, as I said, in general. But primarily, my MSP Fuel works with managed service providers. They range from $1 million in revenue to 50 million in revenue across the board, but just all different sizes and different points of scale. And so we just love helping them achieve their goal, whatever it may be. We offer training, peer groups, private coaching. So we work with them in different capacities. So you can learn more about us at mspfuel.com. And reach out there as well. We'd love to chat with you. But LinkedIn or mspfuel.com.
Awesome. Well, Doug, thanks so much for taking the time to join us today.
Yeah, thanks for having me on, Mark. Appreciate it.
Talk to you soon. Thank you for joining this episode of the B2B Growth Blueprint Podcast. We hope you've gained insights to grow your business. If you enjoyed this discussion, please rate, comment, like on your favorite platform, and share to others who will find it useful. Do you know a CEO, founder, or leader at an early stage B2B services, tech, or SaaS company who would like to be a guest and share their story? Send us a note. Let's schedule a conversation.